Testing, testing. Okay, awesome, awesome. What is going on, traders? Welcome to another video with Digital Goats Academy. I'm Antoine Farrar as always. And if you're tuning in, you know that today is our weekly review where we pretty much go over what transpired in the market the previous week. So I'm pretty excited, even though I'm not gonna lie, we've been getting our heads busted a little bit just because what am I looking at? Okay. Just because indices have not been breaking out of this range, specifically US 30, but NASDAQ and S&P as well. Now, if you're tuning into this channel, if you show support to us, make sure you hit that subscribe button, like and comment. It definitely helps our channel grow, and I greatly appreciate it. But like I said, if you follow our channel, you know I primarily, discuss indices. And what we've been looking at this past week was US 30, S&P, NASDAQ, because we're trying to put ourselves in the best position for a buy position. Now, there has been a lot of inconsistencies in the market, which gave us other viewpoints, such as selling opportunities. But as you can see, just looking at it on the hour time frame, let me zoom in. You can see that we haven't done nothing but consolidate up out of this area, right? Now, the thing that I've been paying attention to mainly is that we talked about this not last weekend, but the week prior, that on the daily time frame. So let's scale out to the daily time frame, and then we'll discuss like what pretty much happened the previous week. So on the daily time frame, remember, this was 2 weeks ago. So 2 Sundays ago, we were looking at, and it did it the same day, Friday. Friday, US 30 broke out of this area. And obviously it closed like slightly above. And then that following week, what we were expecting the market to do is actually to push down exactly where the wick is at. So we had an area annotated there, which was a consolidation zone. And again, if you trade indices, you know consistently that what does indices do? They are definitely attracted to consolidation patterns. So after we had this aggressive push, just this push out of here of this consolidation zone here, or this range, if you want to say, I knew that at that point the market is bullish, right? Now, the only thing is that it's been busting our head with the market basically reacting with buys and sells on a daily time frame. But as you can see, just within this zone over here, price didn't do anything. You know what I'm saying? So we have to respect the last move that we were actually predicting or analyzing the market to do. Remember, we said that price broke out of this area and we wanted price to at least test a percentage of this candle, this bullish candle right here. So So if you scale in, we actually had that happen over the past 2 weeks. That was the only downside, is that we had that happen over the past 2 weeks. But remember, we know that as traders, is that January, February, inconsistent months. You know what I'm saying? Like the market is not, it's very choppy. It's not consistent with trends and stuff. And then any opportunity that the market shows us, we have to take it and then look for another opportunity, right? But what this is doing is building the fact that we haven't had like a major pullback. What this is doing is building that support structure that we wanted to see, because what was our expectations at the beginning of the year, just like we saw last year. If you traded last year, you know the major news was tariffs, right? But what were we looking for after tariffs? We were looking for a buy opportunity. Now, I'm not trying to confuse you with like talks about tariffs. I'm trying to correlate that when we had the buy zone, it was around April. Now, I have mentioned in the past that when we're looking at indices, the buy zone based off of quarters can be anywhere from March to May. You know what I'm saying? So anytime we're looking for areas to buy back up, it's normally going to be around heading into Q2, probably Q2, but yeah, basically the end of Q1 and then going into Q2, right? We're about to head into Q2. I mean, yeah, Q2 shortly, um, going into the next month. So March would definitely be a prime area for indices to start buying up. It just makes sense logically. Do not overthink this. Now, let's go ahead and discuss what happened previously in the market just this week alone. Actually, I want to clear out my markup so we don't create any confusion. So let's see where Sunday's at. Was this Sunday? Okay, so I remember the market gapped up here Sunday, gapped up, tested that gap, then it filled that gap, and then as you can see, the only thing we've been doing is consolidating. Now, the key factor to this is that when I do push out, when I do show you my annotations, you'll see exactly what I was discussing before, where we had that consolidation zone and we were looking for a price to potentially buy up from. I have to respect this because the fact that the market has definitely been in this case, you would say supporting it. If it was resistance, we would say rejecting it. But in this case, supporting it. And as you can see, we have the lowest consolidation zone right here, right? I don't care about this anymore. This information is not important. But there were two things that helped us identify is price buying up, right? So we wanted price to test this area. And as you can see, since price tested this area initially, each time it got higher and higher, or the test was shallow. It wasn't like a full test like how the market did right here. Now, the one thing I do say is that depending on the time frame, I do want like the market to show like a candle versus like just wick rejection. But again, look at how many times the market has rejected this area, and we factor in wicks with the candles, right? So whenever you're confused about, well, is this market structure or not, right? Just turn it to a line chart. Turn it to a line chart because the dips, well, the hills and the valleys will tell you the direction of the market. So for example, this valley right here told us that the market was buying up. This hill up here told us that the market was selling off. You know what I'm saying? And now we're stuck in consolidation. Now the big thing is that, or the next big thing is that we identified the 945 candle. So I don't know if everybody's familiar with how we use the 945 candle, but the 945 candle can tell us a lot. Now, in this case, it was consolidating, but so it wasn't as clear as we needed it to be. So again, we know this is the beginning of the year. The market is not trending yet. So when the market is trending, this is way more reliable than how we're using it today. But what I will say is that, okay, this 945 candle at least told me that price was selling off down here. It did. It never broke below this consolidation area last week at all. Every time it hit this area, rejected it. I even threw down another zone just to make sure, and price actually did respect it. But as far as like the lowest points that price traveled, close to this consolidation zone. So at this point, now that we're at this 945 candle for what? February 19th, February 19th, 945 candle, right? You can see that on Friday, price broke above and closed above there. There is a gap that the price, I mean, that US 30 did create, but I don't think it's necessarily anything to cause for concern. What I'm looking more so is that price broke out of this 945 candle here. We closed above this candle on top of respecting a support structure that we already identified. So for me, just looking at it, at like how I judge my analysis is that we're probably continuing to buy up. You know what I'm saying? And what the market looked like it decided to do was instead of doing the pullbacks that we expect, where we get like a major sell-off like we saw last year, even though that was due to tariffs, you'll see that, okay, instead of correcting myself by pulling back or creating a sell opportunity, I'm just going to consolidate. And that's going to be how I correct. One, I'm going to add confusion to the market, which it definitely did, but I'm also going to accumulate orders for every stop that I hit. That's going to add more equity to that forex pair, to that pair, and then increase its revenue. So for the Dow Jones, or as known as US 30, just seeing this transpire is like, well, it probably, and I just started off the call with like it bust my head. It probably took enough orders in order for the market to continue buying up, if that makes sense. So we know that the market is trying to collect our stop losses in order to add more liquidity to itself. So the fact that I know it did that because I was on the receiving end of that, I feel like the market has, based off of technicals, this isn't like 100% sentimental, but like based off of technicals, I believe that the market has created enough support structure in order to buy back up. Now, the only thing is like how it's going to react today. Today is Sunday. The market is going to open up. So if we scale down, I just want to show y'all real quick where I identified the gap. I think it was like on a very small time frame. Yep, 3 minute. Let's see what's the highest time frame we can see it on. 10 minute, 10 minutes, the 10 minute candle. I mean the 10 minute time frame. So let's create a circle. Let's create a zone since it's so big. Okay, so on a 10 minute time frame on trading view, you can see it through the Black Bull Markets broker. That's the broker that we use because it's closely related to the broker that we actually use to trade with, right? So I don't know how it's gonna be represented on another broker, but I know this is where we're seeing the gap. I'm almost positive is that on my broker on Trade Locker, I'm seeing the gap as well. But we can go ahead and label that that's a gap. Now, normally with indices, when it creates a gap, it runs away from it, especially when it's as like big as the mark as big as this gap is. Because we closed above it, we could have oh, excuse me. Because we closed above it, we could have it to where the market decides to gap for today, like a small gap, but then push down into the gap. I'm not necessarily looking for that, but like I said, I train my mind to like expect the unexpected, you know what I'm saying? Or like have unlimited options on what the market may do without confusing myself. So basically leaving room for error, right? So what I'm expecting is that not necessarily today, but when we see a gap triggered in the market, right? We know that the market normally has to fill that. That's what Forex pairs, right? Regular Forex pairs. With indices is a little bit different. It'll possibly fill the gap, but it doesn't always do it 100%. But what I know now is that because the market gapped up, this at least is telling us this is our buy zone, right? This is a buy move, but the market could definitely come back and test this area as many times as it wants to before it decides to lift off. I'm hoping we test this area like maybe one time and then get away from there. You know what I'm saying? But it just depends on how the market is going to play out that basically this week. But do I expect the market to test this area initially when we have when the market opens up today? No, not at all. But again, I'm annotating it because if it does, I know where the opportunity is. Because at this point, I'm not thinking that we're going to go any lower than this area over here. One, we have a gap that the market has respected. It's respecting this gap. So as you can see, what did it do when this gap was created? I guess that doesn't matter. That doesn't really matter because any gap that's created, it's still going to have its own function. The important thing is that what we focused on initially, which was this consolidation area, which became our support structure. So how about we do this? Let's go ahead and change this to blue because we know, even though we know that's consolidation, we know that's our support structure. And then I'll probably like highlight it orange. Looks ugly, but whatever. So that we know that's consolidation and our new support structure. So at this point, anything like as long as the market stays one above this gap, especially above this gap, but definitely above this gap. And as you can see, we have the Jolts data right here. Like buyers are in the market. I know Trump just had a press release yesterday. I don't know what he discussed, but it obviously influenced the market in a positive way. Because we saw oil on Friday start to gain some momentum, but I don't know what he was talking about in this press conference, but I know that it adds some type of positive influence to the market. So at this point, just looking at how the market created this support structure, yeah, I'm looking at buyers to be in the market. I was just as confused as anybody else, and I'm okay with saying that as a trader because no trader in this world is perfect. So it's okay if we're off, you know what I'm saying, as long as we don't stay off and then put ourselves in the right direction. But overall, we've been talking about this last year that the market is bullish. The inconsistency now is that it's not just a straight line like we had last year. Goddamn, was it a straight line last year? But anyway, that's my thoughts on US 30, and that's what transpired this week. I mean, last week. So our expectations are still to remain the same. If we see something different, then obviously we'll discuss it at a later time on one of our videos this week. But I am still looking at the market to be bullish. And then if it does show me any signs of like bears slipping in, then we'll adjust. But based off the stock market, I think we're good. Now, S&P has definitely been all over the place as well. I'm not gonna lie, it's been creating those bearish patterns, stronger bearish patterns than US 30. I will say that S&P and Nasdaq have definitely been given some conflicting biases, just how the technicals have been producing. And I don't really pay too much attention about the fundamentals when it comes to indices. Like I pay attention to news, but I don't like how I used to pay attention to forex pairs when it came to news. Like I don't do that with indices. The only thing I care is like opening bell, and then if we do have some type of major news, but I'm not using that to try to figure out, oh, if the market is buying or selling. I'm mainly pure technicals, to be honest, yo. Not to take that trademark from anybody. But like we just discuss a lot of technicals because the technicals tell the story. And again, that can give conflicting views on what you're looking at for your analysis, especially if you haven't been watching indices. We've been watching indices and it's still been throwing us for a loop a little bit, you know what I'm saying? But, if you're just now jumping in indices, you might be like lost in the sauce, think that oh, market is selling when it's actually buying. One thing is that we could discuss like what happened last week. Let me go ahead and break it down. Where are we at? Sunday, 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 Sunday. Okay, so this was last Sunday right here. Was this last Sunday? No, this wasn't last Sunday. It was. Wow. All that happened. Now, same thing with S&P. S&P gapped up, filled the gap, bought up, and then basically started ranging. Now, at this point, I did believe that S&P was creating, well, really the Nasdaq. S&P was creating that consolidation pattern that we know that price would bring the market down. But one thing is we have to let the pattern finish, which is a good sign. Like I've discussed this before, where how we're still putting ourselves in the right position using these type of patterns because the fact that it didn't do the consolidation and then breaking downwards, I know that we're buying up. I've already annotated where the support structures are at, but I already know that we're buying up from here. You know what I'm saying? Like because again, we've seen these patterns so often that when it violates these patterns, we know that we're in the wrong direction. So I really hope y'all are paying attention to this and it's helping you. You know what I'm saying? Because again, even if you get your head bust by saying like, man, I was selling here and then the market went all the way up here, normally it's expecting you to chase it. You know what I'm saying? Now that we have like a little bit of calmness in the market, we can clearly see that this is support. So if you're just looking at where we're at right now, obviously this is Friday. Friday, the market got dumb bullish. Thursday, it created its first point of support, and then Friday it wanted to validate that. As soon as like 1 p.m. hit, or is this opening bell? Oh no, opening bell hit, and the market got dumb bullish for S&P and Nasdaq. And then at 1 p.m. the market continued rising. 1 p.m. is where you see that gap that US 30 presented, but S&P didn't get as volatile as US 30, but US 30 definitely got bullish. But at this point, we know that the market has respected this overall area of structure. So we just scale back or push the market back. And we can use other scenarios in the market or other sequences in the market to validate this exact pattern. I'm going to show you with US 30 real quick. Look at US 30. Did it not do the same thing? This was The end of January, US 30 did the same thing, creating support over here. It acted like it was going to consolidate and push down. And what did it do? This is not a bullish flag pattern. I hope y'all know that. I don't know what kind of pattern this is called, but this is not a bullish flag pattern. It definitely acted as it. But the thing that I want y'all to pay attention to is that after it broke out of it, look what it did. It tested it once and then twice a little bit lower, creating the support structure that the market needs to buy up. Now, if we go to S&P, it didn't do exactly that, but again, we can use the similarities of what the market did. What did it do? It broke out of there. One, two, created that support structure, bounced. And almost identical as the same pattern we just saw. We just saw with a different currency pair. It's still in the same genre, if you want to say. You know what I'm saying? It's still in the same sequence. So we're discussing indices. So when I see correlations like that, it's like the light bulb in my head goes off like, okay, I'm seeing the same thing just with a different pair, but they're of the same family. So I'm basically seeing the same thing. Anything that I could take from US 30, I promise you I can add to S&P and P and then make a decision off of that. So now that I'm seeing this, it's kind of like obvious and we've already annotated it. Price created structure, bought up. What's there more to discuss? The only thing is about how is price going to react from here now that we broke structure. For indices, remember, indices are straight bullish or bearish, and then they come back to their structures if they're not ranging or consolidating. So I can't explain like areas like this or areas like that. Like, yeah, that's normally where traders make a mistake if they're not holding their trades for their entire week or if they're getting in and getting out and they're not getting in the right direction. You see what I'm saying? So, yeah, like S&P to me is clear as day. We just got to see how the market is going to react, if it's going to try to push down and test these highs that it broke out of. But I don't think so. I think that because at that point, I think that the market will be bearish. Now, let me see if there's a gap on the smaller time frame. Same thing. Okay, you can only see it on the 10 minute. That's the highest time frame that you could see it on. Same thing right here. We're going to turn this and then label it as a gap, because that's what it is. Knowing that this is the area where we will look for buys. So if we get out of our trade and we see that the market is heading back to this area, we know that this is another buy zone for us. I can go into like the whole Fibonacci sequence, but that's not what weekly review is for. Once we get more data between today and Monday on market forecasts on Tuesday, we'll discuss a little bit more about that. But last but not least, NASDAQ, let me go ahead and annotate that gap since it's right here in front of my face. So I'm not gonna lie, I was kind of basing a lot of stuff like how Nas was reacting. The way Nas was reacting was kind of more clear. Like I said, S&P and the Nasdaq were definitely showing bearish pressure, and there goes that 945 candle that we utilized, yo, right? So it was definitely showing bearish pressure. But the thing was is that we had already identified a pattern for the market to buy up from. I was just like, again, this is what indices does. It dives lower and makes you second guess because your expectation is like the previous high or a shallow pullback. And then after it buys up, you're like, okay, home free. And then the market drives down. You're like, oh man, this thing must be a sell. And it wasn't. It was definitely not a sell. So you can see I did the same thing over here. I started annotating the consolidation moving downward, thinking that price will seeing if price is going to break down. One thing I do as a trader is that I'm still going to annotate. Like even if I'm questioning it, I'm still because it helps me make sense of the market definitely after we get more data. So as you can see, I had already annotated like a high. The market broke out of that. It told me that we were buying up. Then it made this conflicting view over here where the market sold off at that point and then created support at this area like between Thursday and Friday. And again, creating a gap too on the 15-minute time frame, which is the highest time frame that we could see it. So at this point, the market has told us, yo, I'm trying to create structure. You know what I'm saying? Matter of fact, let's go ahead and view where we came from for the NASDAQ. I could already see it right here. This was Sunday. Another gap up. Let's just annotate that for we don't need it anymore, but we're still gonna recognize it because like it's there and this helps me explain what's going on. So again, market gapped up, tested that area, filled this gap. They wanted to fill this gap, but it also wanted to create support. So this is the last time that NASDAQ dove down a little bit deeper. A little, I didn't have like an area like I do for S&P as the NASDAQ, so I just was basing it off of this pattern. It dove into the pattern a little bit lower than what I expected, as you can see. Let's see where that lands. Yeah, I was not expecting that. I don't even trade the Nasdaq, but I wouldn't have been able to accurately pinpoint that. S&P, we definitely pinpointed it. US 30, we pinpointed it. Nasdaq, whatever. You know what I'm saying? Like whatever. Do the best we can. Because again, for me, I'm only using Nasdaq to be the catalyst for my investment portfolio anyway, since I'm in so many stocks that are in the that are powered by the Nasdaq. But anyway, boring information, right? So as you can see, price created support right here on Friday. And this was the area one based off of this pattern because as we know, whenever we see consolidation moving downward, our expectations is for the market to push down and then buy back up. Well, after it pushes down, next time it comes back up here, maybe one retest and then a buy back up. The fact that it didn't do that, it just broke out of this area initially. It's already telling us this is the buy zone, which we kind of already knew that anyway. This is the buy zone. But if you were lost like last week because of all the uncertainty, it should be more clearer today. So this is the buy zone with what we're looking at, just based off of what happened. NASDAQ was closely related to S&P. As you can see, US 30 has definitely been like fuck you, you know what I mean? Like all week since pretty much since the end of 2025. That's how US 30 has been reacting. But like I said, as we get closer to Q2, because the market is going to become more trendy, we're getting a lot more clarification on what the market is trying to do overall. And for me, I try to find these moves early. I don't need the market to break out like US 30 did like 3 Fridays ago to show me that it's buying. I mean, I needed that in that scenario because we were still ranging. But whenever I spot this, most traders are like, oh, well, I needed to see it to break the high, man. Fuck that. I already understand the structure. You know what I'm saying? I understand that this is the support structure. Anytime indices create support, it's going to respect that. It creates resistance, it's going to respect that. But again, we're going off of what? The overall trend. So if we just step back, one thing that I always start off with is looking at the weekly time frame. So we just clear this up. You can see that what? Price has been buying up, and the only thing it's done just in this general area is what? Um, Consolidate. I don't know why I got lost right there, but consolidate, move south, correct itself. That's what I was trying to think of. It just corrected itself. You know what I'm saying? It didn't do the general pullback that we're expecting. So, is there a possibility we could see a pullback that goes lower for like Nasdaq or S&P US 30 in 2027? Possibly. I doubt it. If anything, I would see a reaction like that happening possibly like after Trump's term ends, or maybe like the year before the last year that Trump is in office. And then we might have some type of pullback or correction. But indices, they really don't flow like that. If they want to get bullish, they're going to get bullish, and they need some type of negative news or heavy reaction in the market in order for the market to say, hey, I'm actually selling off. Because last year when tariffs hit, that was a sell. So if we're expecting the market to sell off here, you know what I'm saying? We need something negative to react, like war or more tariffs. I mean, I hope it wouldn't be war, but like more tariffs, things like that. You know what I'm saying? Like things that could really impact the market. You know what I'm saying? I know that there was like a lot of uncertainty after like Warren Buffett retired, and I think that's being priced into the market now. But I think these investors probably already found a home, and it's like everybody's happy. So more people and obviously companies are reinvesting back in the US 30, NASDAQ, S&P. Not to mention, Trump did say he expects the Dow Jones to go to 100K. I remember when he said in his last, I think at the World Economic Forum, where he said US 30 is going to 50K. We had already expected 50K, but we just thought that the market was going to dip a little bit before it did that. It consolidated, market went to 50K. He says 100K before the end of his term. 100K of US 30 before the end of his term. So please don't be the trader that's out here like missing opportunities just because you're like confused or you're paying too many things at once. Focus on indices if that's what you trade because you really don't have no room for anything else. And then we're going to be able to take advantage of this. So just based off of the trend, I have to respect that or I have to believe that the market is continuing this direction. This move was just a consolidation move, if we just look at it through well, US 30 looks more straight and narrow, and S&P and the Nasdaq, which makes sense. They're the only ones that kind of had that sideways movement without like a strong burst to the upside. So again, I base a lot of stuff off of US 30. So if US 30 is pushing up, S&P, Nasdaq is pushing up, and that means Bitcoin is pushing up as well. So I'm gonna discuss this real quick, and that'll be the end of our session. And I don't want to go too deep into Bitcoin. I just want to say that I believe that this is the buy zone. You know what I'm saying? Price dropped down again to where are we at? Thursday. Yep. Thursday, we dropped down to 65, 613. What did I say, man? I said 65K is probably going to be the buy zone. It did go lower to 60K, but I do think that this is our buy zone sequence. Again, we only have technicals to go off of when it comes to cryptocurrency because even though it's been around, it's still so new. Like you don't have enough economic data to say, unless somebody like Elon Musk is like, I sold all my Bitcoin, then it's like, okay, you definitely push the sell button on that scenario. But, we don't have any other like strong economic data that really influences, or for what I see, that really influences cryptocurrency behavior. So again, treating it as a stock, it's at a prime buy zone, an area that we had already been expecting. So the fact that it rejected here, maybe we'll have like a support structure. Maybe it'll hit 60K again, but cryptocurrency doesn't really do move like that. It doesn't like always create support structures. It just consolidates and then pushes the market back up. But I know that if the market starts showing bull moves from here, it's gonna blow past all this area over here. So it's gonna blow past that 95K mark. It's just gonna take, a little bit of time as the market starts getting more liquidity to boost its momentum. But yeah, I definitely think that cryptocurrency across the board is buy time. So, if you miss this opportunity again, a lot of traders, a lot of investors have been missing the opportunity or been skeptical of cryptocurrency. It's kind of showing us it's here to stay. There's been a lot more usages of cryptocurrency. So like, people have actually been using cryptocurrency to buy things. It's kind of heading back to that time when Bitcoin first like came on into the scene and it was used for other things, but now people are like, okay, I can use this as a form of currency. So the more people use it, the more people are trusting it. And obviously cryptocurrency is here to stay. So it's just pretty amazing to see that this is where we came from for something that a lot of people didn't believe in. I mean, including me at one point. But again, if you are a late investor, this is probably the last time you're going to be able to get prices this low where it matters to you and your family and your generation. Yeah, you can blindly invest and then, generations benefit off of it, but I'm pretty sure everybody that invests is trying to benefit off of it in their lifespan. So if you miss this opportunity, I mean, unless you generate the capital, which even at 195K or 100K, that's kind of like high to be buying Bitcoin. Now, I wouldn't say use this to invest primarily in Bitcoin. There's other crypto tokens out there. Bitcoin Cash, you know what I'm saying? Super low right now. Definitely about to jump back on that. Ethereum. I'm glad Ethereum came this low. Shiba doesn't look too reliable. I don't know too much about it. but I still think that it's a good investment to buy because I forgot Shiba has a purpose. Tron definitely because I was actually surprised. Yeah, Tron. Man, I'm just giving you guys like I'm just giving you some traders like some crypto tokens I invest in. XRP shot down. I even think this is a good area for XRP. It hit a dollar flat, and man, I wish I caught that. So I think that even for XRP, this is a good area to start reinvesting. Again, this is no financial advice. You do what you want, but I'm not going to be the one missing the train this go around. We saw how the influence of cryptocurrency has been doing like over the past decade. And it's definitely been adding influence to the stock market as well as like in foreign exchange trading. So if you're seeing like US 30 and NASDAQ go up in value, it's probably due to more people investing in cryptocurrency. So that's kind of like food for thought right there. But I don't want to talk over talk, you know what I'm saying? We covered what we needed to do. That was about 30 minutes, 45 minutes. So that's all I got for you traders. Obviously, we'll just fire as the market opens up today and more data is presented, and then we'll figure out what we're doing from there. But my bias remains the same unless I see price break those lows, which I don't think we're going to see. But again, remember, we have that gap, which will be an area that the market will probably try to target eventually if it doesn't do it this week. So just pay attention to that stuff. Don't get caught with your pants down. Make a lot of money, you know what I'm saying? And I hope to see some of you at the Forex Summit this year. But I'm Antoine Farrar as always. I hope everybody has a successful trading week. I'm signing off. Peace.